Yeah, thank you, Diksha. Good morning, everyone. I'm Ashish Poddar from Systematics Group. I welcome you all for joining today. It is our pleasure to host the senior management of Prince Pipes and Fittings Limited, led by Mr. Parag Chheda, the Joint Managing Director of the company. I request Mr. Parag to give an opening remark, post which we shall open the floor for question and answer session. Over to you, sir.
Thank you, Ashish. Very good morning, everyone, and thank you for joining us for the Q4FY22 earnings call. The presentation and the press release have been issued to the exchanges and uploaded on the company's website. I hope everyone had an opportunity to go through the same. I'm happy to state that Prince Pipes has been able to raise commercial papers worth approximately 25 crores. Our commercial paper rating is A1+ as per CRISIL. While we continue to remain long-term debt-free, the raising of commercial paper highlights the quality of our balance sheet and the faith of investors in our business model and long-term prospects. Let me start with a macro view at the industry level before giving a perspective into our company level performance and our strategy going forward. The volatility in the raw material prices continued throughout the March quarter. While PVC prices softened in January and February, upward hikes also took place in the month of March. This led to uncertainty across the channel. This kind of volatility and uncertainty results into an environment which is not very business friendly. And I strongly believe that in such times, it is important to focus on long-term organization goals of A, building stronger brand equity through network expansion, B, product portfolio expansion, and C, reinvesting into the marketplace. These efforts have started showing results, but the true dividends will be obtained over the medium term. Despite the headwinds and despite a strong base, we have been able to post a 9% volume growth in Q4. We have continued to gain market share even in such demand environment. However, I believe it is important to focus on what is next. What will be the enablers for Prince to continue to gain market share going forward? I will focus on few of these enablers today. Starting with the significant progress that we have made in digitalizing our value chain. Our SFA, which is the sales force automation, should be live by the end of Q1, while our DMS, which is the distributor management systems, will be made live in a phase-wise manner over the next 2 quarters. The sales force automation and the distributor management systems will have multiple benefits such as 1. Better visibility of the secondary markets. Second, better control on inventory management, not only at the company level but also at the distributor level. Third, superior working capital efficiencies. Fourth, an efficient tracking of the ground level sales teams' KPIs. I believe these digitalization programs make us immensely future ready. On the B2B segment, we have been making steady progress. Prince has been able to break through multiple key accounts across the country. However, we have a long way to go in this segment, and we continue to put efforts in the right direction to ensure the B2B segment becomes a growth driver for our organization. Now coming to the underground drainage vertical, we have launched a series of inspection chambers and manhole chambers. These products will add to our range in the underground drainage segment. These inspection chambers and manhole chambers are made of polymers and will replace chambers made of conventionally used materials like concrete due to better performance and faster installation speeds. We will be cross-selling chambers to the end users who are using our CORE-FIT DWC pipes. Lastly, we have also launched PE-FIT aqua systems, which are HDP piping solutions. These pipes are used for water supply and have a market across our retail, projects, as well as infrastructure vertical. This range expansion will enhance our ability to penetrate across market segments, especially in the semi-urban and rural markets of India. We have set up HDP piping capacity in the Jaipur facility and plan to set up this product in the Telangana facility by September. In conclusion, I would like to state that volatility and uncertain environment is short-term in nature. We continue to remain extremely optimistic on demand going forward due to significant demand traction in the real estate sector. Our ability to consistently deliver volume growth and gain market share in such environment is encouraging. This volume growth has been a result of efforts across applications like plumbing, agri, underground drainage and industrial application. B, across different segments like retail, projects and infra. C, and due to constantly innovating and expanding within our core by introducing newer products within the piping industry, which adds to our robust product range. We at Prince Pipes are well poised to capture this demand across India due to these reasons. I will now hand over this to Shyam to walk you through the financials. Thank you.
Thanks, Parag bhai, and good morning, friends. I'll be taking you through Q4FY22 financials now. For Q4FY22, revenue has grown to 901 crores compared with 761 crores in Q4FY21, indicating a growth of 18% on account of better product mix and improved realization. Sales volume has increased by 9% at 45,287 metric ton in Q4FY22 as compared to 41,644 metric ton in Q4FY21, indicating a better market share gain. EBITDA margin for Q4FY22 stood at 15.6% compared to 19.3% in Q4FY21, a decline by 370 bps. For Q4FY22, EBITDA is at 140 crores compared to 147 crores in Q4FY21, a decline by 4%. PAT stood at 88 crores compared to 97 crores in Q4FY21. For the full year financial year 22, revenue is at 2,657 crores compared to 2,072 crores in FY21, a growth by around 28% on improved realization. Sales volume has increased to 1,39,034 metric ton in financial year 22 as compared to 1,38,289 metric ton in financial year 21, indicating a marginal increase of 1%. Profit after tax has improved to 249 crores from 222 crores in the previous period, indicating a 12% increase. Working capital days has increased to 68 days, mainly on account of increase in the inventory levels. By end of Q1, inventory level shall get normalized. Company has declared final dividend of 20%, thereby making a total payout of 35%, including an interim of 15% for the year financial year March 22. During the quarter, the company has utilized the balance IPO proceeds for the purpose it was envisaged. Our gross debt as on 31st of March 2022 stands at 150 crores. company remains to be a long-term debt-free company. With this, we would like to open the floor for questions. Thank you, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and 1 at this time. We take the first question from the line of Sujit Jain from ASK Investment Managers Limited. Please go ahead.
Parag bhai and team, congratulations on a decent set of numbers. When one looks at the PVC price, now that it has fallen to about 125 rupees, do you see a prospect of inventory losses during the current year FY23?
Thank you, Sujit. So, yes, there has been a significant correction in the past month in PVC prices. And, as you are aware, the PVC raw material has been extremely volatile like any other commodity in the past few quarters. And there will be certain quarters of inventory loss, certain quarters of inventory gain. So right now it does look like there could be some inventory loss in the first quarter. But, if I look at the March quarter, the kind of correction that we saw in the PVC prices in January and February, we were certain of some inventory losses, but then the price increases in the March month, sort of neutralized any inventory loss. So it's too early to say, but I'm sure any inventory gain or loss will not be an annual phenomena. It will be a quarterly phenomena. On a 12-month basis, it should neutralize like it always does.
So therefore, your guidance for FY23 in terms of margins would be what?
So I think we continue our guidance that we have always given for the past many quarters of operating margin in the range of 13 to 15%.
Sure. And in terms of market size, if you can spell out what would be the overall market size end of FY22, the size of within that CPVC, PVC, HDPE, SWR.
So. So one is on polymers, one is on applications, right? So I think if you're asking about SWR, agri, that is by application, or by CPVC, PVC, HDPE, which is by polymers. So are you looking for a polymer-wise split or a application-wise split?
A polymer-wise split?
So I think, PVC, of course, is the most versatile material. It can be used for, all applications, be it cold water plumbing, SWR, agri, water supply, etc. So that is always going to continue to have the lion's chunk, the major share. CPVC, of course, is a fast-growing market. In terms of market size, CPVC would be, around 150 KT of annual sort of universe in terms of volumes. And PPR is a niche market, and in that market, of course, we are the undisputed market leaders.
And in terms of the size of PVC, like you just spelled out for CPVC, 150 KT.
I don't have the exact number. Allow me to get back to you on the exact number for that, because in the past few years, there's not been any official research. So we'll get back to you on that.
Sure. And in terms of differential between CPVC and PVC pricing, at 125 PVC, what would be the pricing for CPVC currently?
Yeah, so the gap obviously had narrowed down because PVC had gone up significantly, and CPVC did not, go up in that towards the same extent. However, having said that, currently that we are seeing correction in PVC prices, whereas CPVC, we are seeing some increases that are being passed on. So that differential that had started narrowing has now started coming back to the regular levels.
Which would be about 40-50 rupees higher than PVC price.
I'm sorry?
Which would be about 40 to 50 rupees per kg higher than the PVC price currently. Is that the correct understanding?
It would be higher than that. It would be north of 200 rupees per kg.
Sure. Thank you.
Thank you.
Thank you. We take the next question from the line of Mr. Achal Lohade from JM Financial. Please go ahead.
Thank you for the opportunity. First of all, good performance in the challenging environment. My first question is, if we look at the balance sheet, we see that the inventory days have gone up meaningfully. If you could give some idea as to, what is the breakup in terms of raw material and finished goods. And number two, I think Shyam did mention in the opening remarks that this inventory will be absorbed in the first quarter. Did I hear it right?
Yeah. So, Achal, I think that's an important question, and let me clarify that, for the entire audience. So, firstly, if we look at the inventory in days, it is around 85 days. Whereas normal inventory that Prince has always carried is around, in the range of 60 to 70 days. So which means that the gap is around, 15 to 20 days of higher inventory. Now, the reason behind this higher inventory is that, we have witnessed a major global supply chain crisis in the past year. And, since the past few quarters, we have consistently maintained that this is a strategic decision by the management to keep higher inventory levels than normal. Because in the face of a supply chain crisis, availability of material is the biggest enabler for market penetration. Throughout this year, there have been shortages of product across the smaller players and even within some of the larger players as well for both PVC and CPVC. Throughout the entire year, there has never been a single day of shortage for product at Prince. And, this is also reflected in our volume performance for both the quarter and for the financial year. Despite a large base and despite the uncertain market conditions, we have been able to consistently outpace the industry growth and gain market share. So the reason behind this higher inventory days has been it's not something which has happened by accident. It was a strategic decision to ensure that we never have any shortages and are constantly able to keep up with the demands of the market. What I will say, though, is that this is not something that will continue because I do see that the supply chain crisis has, almost gone away and we are back to a regular global supply chain. So I think going forward, Achal, to your question, the inventory should normalize by June, July, and this will be reflected in our performance going forward as well. We are confident of that.
Got it. Could you help us with the breakup in terms of raw material and finished goods?
I don't have the exact breakup. Allow me to get back to you on that.
Okay. The second question I had is, with respect to PVC resin price, how do we look at this? I mean, we have seen, as you said, Jan, Feb was soft, March picked up, April and May we have seen a correction. And compared to historical, it is still up by 60-70%. So if you could give some sense, some direction, I think that would be of great help.
I think, Achal, at this point, your guess is as good as mine. That's on a lighter note, but I think we have seen extreme volatility, and there has been a sharp correction in the past 2 months. I do see, the average of PVC prices last year is not sustainable. I think that's very clear. And while correction in the PVC could have some short-term disadvantages, I think in the long term it is good in terms of plastic consumption and PVC consumption for the country. To put a number on it, is very difficult. But if I have to give a guesstimate, I think, anywhere in this band of $1,250 to $1,450 per ton seems sustainable. And the reason for that is today, VCM, as we speak, is around $1,250 per ton. And typically the PVC VCM spread, for it to be viable for a PVC resin manufacturer, has to be around $150. So today it is at $1,250. So simply because of the feedstock, cost dynamics, I don't see major corrections, but I don't see a major upside from here as well. So to give you a range, sitting at this point of time, I think $1,250 to $1,450 per ton seems to be what this next year will look like.
Got it. And just a clarification, is in an answer you mentioned that supply chain is normalized. Does it mean that most of the capacity constraints what we had talked about in the past year have got normalized at the global level in terms of PVC manufacturers?
Yes, I think to a major extent. It's still not back to normal exactly, but it's majorly, I think, there, and in the next few quarters, I think that the next quarter itself, I think it should completely ease off.
Got it. And just last question, if I may, in terms of competitive intensity, like, in last 2-3 years, we had seen that some of the smaller players really had tough time, and even some of the larger players as well. Now, as the supply chain is normalized, do you see the competitive intensity actually going up again? And could that have any impact in terms of the operating margin performance for the industry?
I think, Achal, this has always been a competitive industry, right? So I think we are not someone who is going to shy away from competition. I think competition does make us more efficient in terms of focusing on new products and expanding distribution and investing in the brand. So I think those things will continue to happen. And everyone sees the growth, right? It is a growth-driven industry which has constantly outpaced other industries in terms of growth. So I think always there are going to be some more organized players coming into the segment. The way I see it is, today at Prince, we are much happier to compete with a organized player who may be a new entrant, as long as they are eating up the market share of an unorganized player. Because any organized player is always going to have discipline with respect to price, with respect to credit, with respect to quality, consistently giving a quality product in the marketplace. So I think as long as there are organized players that are coming in with discipline, I think it's good for the industry, it's good for the end consumer, and it makes us all more efficient. I don't see it having any major impact on our profitability.
Got it. Thank you so much. Wish you all the best. I'll come back in the queue for further questions. Thank you.
Thanks, Achal.
Thank you. We take the next question from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Questions from my end. We were in the start of the quarter, or maybe even in middle of the quarter, we were actually looking at a flattish kind of a growth. Just want to understand the reason that led to upbeat growth. What was it related to? Was it agri demand? Was it plumbing demand? And more importantly, how is the inventory now at distributors' end? Have we seen some amount of stocking up in the month of March, and now it's getting normalized? Some flavor there.
Yeah, thank you, Sneha. I think we were definitely looking at a flattish sort of a quarter towards the first half of the quarter, but I think March month did see a revival in terms of demand, in terms of sentiment across the channels. This has largely been driven by plumbing and SWR. Agri did improve in March compared to Feb, but not to the extent that it usually delivers for us in the Jan to June period. So this demand has been still driven by plumbing and SWR products. And I think the second half of the quarter has been much better than the first half of the quarter. Also, if I have to give you a more long-term view, over the past 2 years, we've been also heavily investing in branding and expanding the distribution network. So at some point that is bound to pay off in terms of helping us outpace industry growth. And to answer the last part of your question, I don't think dealer level inventory is very high. In fact, because of the volatility in raw material prices, I think the dealer level inventory should be moderate or, moderate to low in that band.
So does that also mean that now they are pretty hesitant in terms of picking up the material, given that, there has been such a sharp fall in prices? Or now after this 10 rupees, which is already very steep, you think the acceptance will come back? Or do you see further, destocking and further fall in prices? Just want to understand the trend from your perspective.
See, Sneha, you are aware whenever there is a sharp correction, there is a tepid sentiment in the channel. Right, so that's just a part and parcel of the business. And this time is going to be no different than the other times. So there is definitely a reluctance to stock up and bring inventory back to moderate to high level. But see, this is part and parcel of the business. We cannot, today we don't have a trader mentality. We cannot look at prices or inventory gain, inventory loss, or push product when prices are high, and we as a management need to focus on the things we've always focused on, like distribution and product, new products. Any restocking or destocking phenomena will continue to happen, and over 2 quarters or 4 quarters it always evens out. So that's how I see it.
Perfect. And could you also quantify your CPVC growth rate versus PVC? Some flavor there.
So CPVC, the base was high in the Q4 of the past financial year. Despite that, we have seen a growth in the CPVC space as well. It has been, in similar range to PVC. Both have grown to the similar extent.
Understood. And one last one, if at all I may just get in, the ad spend during the quarter and during the year.
I'll just give me 1 minute.
Sure.
Sneha, the ad spends for the financial year are 41 crores, and out of that, 13 crores have been in
Q4.
March.
Understood. No, thanks a lot. I'll get back in the queue, and all the very best.
Thank you, sir.
Thank you. We take the next question from the line of Pranav Mehta from Equirus Securities. Please go ahead.
Yeah, good morning, team, and congratulations on decent set of numbers. Sir, wanted to understand on the current availability of the CPVC resin, because we had also heard that availability of CPVC resin is also tight in the global markets. So have the plants which were expected to get commissioned in India, have they started supplying some of the CPVC resin, which might reduce the imports for the players? That was my first question. And sir, the second question is related to how are you adding your channel, particularly in the Tier 1 and 2 markets and Tier 2 and below markets. So how that thing is panning out, if you can share some number of dealers and distributors there. And the third question, sir, was related to the overhead water tank business. So how that is shaping up. Thank you.
Thank you. So I think, if I remember correctly, the first question was to do with CPVC. So the local capacities, Pranav, have not really kicked in for the CPVC raw material manufacturers. So India, as a industry, we continue to be import dependent for the CPVC raw material. The availability is still not easing in the way the PVC raw material availability is easing. And I think this will continue for the next 1 year minimum. And we are in a good position and have strong supply security in CPVC as well. And like I mentioned in the previous answer as well, that we have been able to post low double-digit growth in CPVC as well, despite a high base. So I think we continue to gain market share in the CPVC segment on the back of material availability and all the activities that we're doing in the front end. And I'll join that to your second question in terms of also the distribution network that we have added has helped us grow our plumbing and SWR portfolio market share. And this, we have constantly maintained number of distributors are not very important because the yield per distributor can vary from 1 crore to 70 crores. What is important is adding the distributors in the right markets, in the markets where there are white spaces, markets which are weak for Prince today. And I think we've been able to consistently do that over the past few quarters, and that activity continues. So it's a spread across urban, semi-urban and rural parts. So of course, while today our distribution network is as good as any distribution network in the industry, it's something that we are not content with, and we need to continue to improve the reach and the quality of the distribution across North, West, South and East India.
Sure, sir. And sir, on the overhead water tank business, how is that shaping up?
Yeah, so the tank business is shaping up well. The good part is that the distribution network is exactly the same. So right from the distributor, retailer, plumber who buys a Prince pipe, the same channel buys the tanks, and which was the reason for getting into the tanks business. Initially, we have always stated that our focus is not on numbers, but it is on quality and distribution. And I think across country, across different markets, we have a very strong brand equity in the tank space in terms of quality, and the market realizes our quality that we are giving to the market, the design that we are giving to the market. And we have reached a strike rate of around 2 to 3 crores of sales per month. There is a huge scope for growth going forward, but this will not come overnight. This has to come in a structured manner, the way it has come in the pipe business for since the past 3 decades. So we don't need to focus only on the top line of the volume when it comes to tanks. It's on focusing on improving the asset-light manufacturing network and focusing on the quality of the product that we're giving consistently to the market. And I think the numbers will take care of themselves. But the potential is huge, and we are a very small baby in this market today, of course, because we've entered only in the past 1 or 2 years.
Sure, sir. And sir, one last question on the competitive intensity. So obviously the unorganized and semi-organized guys have remained impacted in last 2 years. But what we are also seeing is that some of the other guys are also planning to, let's say a few of the MNCs are looking at Asia as a growth market, and they are trying to acquire assets, and as well as some of the other groups are also entering into this. So can you throw some light on how the competitive intensity is shaping up on the organized side of the market?
Sure. So I think firstly, new entrants coming in, not only Indian, but like you said, players from overseas coming to the Indian piping industry, I think is the biggest sign of the opportunity, of the potential that we are seeing, and it reiterates the beliefs and the prospects that we have for this industry to grow exponentially over the long term. Coming to competitive intensity, like I said, we always welcome organized players coming in, MNCs or larger Indian players. It one helps us, keeps us on our toes, makes us more efficient. Also, a lot of new products get launched, a lot of new avenues for growth. And we are not shying away from competition in any way. I don't think this will have any sort of material impact on our profitability or our earnings. But, I see this in a positive way, and organized players who are going to focus on, who are going to be disciplined and focus on new products is always good, not only for the end user, but also for us as an industry.
Okay. Thank you, sir. That's it from my side.
Thank you. We take the next question from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So just a couple of things in terms of the capacity. You broadly at about 283,000 tons. So what's the capacity addition going forward? How should one look at it and broad capex plans?
So I think, Abhishek, thank you for your question. I think most of the capacities that had to be put in Jaipur and Telangana are on stream. So there will not be any major new capacity coming in. I think the focus, at least for the next, if I have to talk 4 quarters, has to be on sweating out the assets at Jaipur and Telangana, ramping up capacity utilization by ramping up the market share, the market penetration in these newer geographies that we've put up plants in. So I think for the next 4 quarters, we just need to keep our focus on sweating out these assets and improving the utilization before putting up any major capacities going forward.
And the capacity addition in Jaipur and Telangana put together will be more like 30,000 tons in this year? That has just got increased?
Just give me 1 second, please. It would be around, 35 to 45 KT in that range.
Okay. And the other thing is, Nihar, is because, see, this year your cash flow generation has not been positive because you had a higher capex of about 170 odd crores and plus you had a higher inventory build-up. But next year onwards, you'll have a much higher cash flow generation because your working capital requirement will be quite stable and also in terms of the capacity expansion not happening. So how should one look at the capital allocation more from maybe a 2 to 3 year perspective?
Sure, I think you're right. Any challenges of working capital or deviation from the regular is only on account of or majorly on the account of higher inventory days, which like I said, will normalize by July. So we do anticipate stronger cash flows in the next 1 or 2 years. In terms of capital allocation, this is something that is being brainstormed regularly at the senior management level with our CXO team. So I think the first thing is that we continue to remain a growth-oriented organization, and there will be capital allocated either within the industry or to allied products like tanks or any such other avenues that we think will help the company grow in a structured manner over the long term. And there will be a sort of consistent dividend payout as well, what we have maintained over the past 2 years. We would like to continue that going forward. But the focus is that the organization will continue to be growth-oriented and invest in the marketplace, both in terms of capacities and in terms of branding and building a better brand equity over the long term.
Okay, and broadly, if I look at your utilization, while for the year your utilizations have been lower, but probably you have exited with almost about 60-65% utilization. So what is the peak utilization that you all can hit?
Peak utilization would be in approximately 70%, 70 to 75%. And a lot of our capacities have actually come in the second half of the financial year as well. So that will actually, the true picture of capacity and the right understanding of the capacity utilization will come at the end of the current financial year.
Okay. And the other thing is this capacity expansion as far as the HDP is concerned. Now, if you can just broadly help us understand that where is the demand from HDP coming? Is it more for the Nal Se Jal projects, or is it also coming into the agri part of it, given the sharp increase in, and if there's a price differential between HDP and agri PVC pipes, just some color there would be helpful.
Yeah, I think Firstly, like we said, Abhishek, I think this HDP demand will be across retail projects and infrastructure, but mainly it will be driven by infrastructure followed by the retail market. That's where the demand will come from. And you're right, it is because of the gap between PVC and the other polymers like PE and PP is not what it used to be, which is why HDP consumption has increased over the past few quarters, and which is why we have forayed into this segment. Again, this segment is not going to be lucrative as far as margins are concerned, but it's going to be a good volume driver, good potential to cross-sell this product in our distribution, and obviously help us with operating leverage benefits in terms of cost absorption and capacity utilization as well.
Okay. Just one last question from my side. If you look at the overall demand, if you look at the individual segments of your demand drivers, one is housing, which has been strong and which the outlook is also strong. Agri has been weak because of a weak base, and last two seasons have not been great. And then you have Nal Se Jal and infrastructure projects. So housing and infrastructure projects, I think you have been consistent in saying the demand has been good. In terms of agri, how are you seeing? Is it like this season also because of the channel destocking and PVC prices coming off will be kind of a washout, because agri is a short season, right? You have probably March to June, and at that point in time, lower PVC prices, should it impact demand because people will kind of postpone their purchases? How should one look at it here? If you can just help us understand with that.
Yeah. So these are the past couple of agri seasons have been washed out, Abhishek, because of the higher PVC prices, right? And which has led to the farmers postponing their demand for the products to whatever extent that they can. End of the day, it's not a discretionary purchase. It's a purchase which is needed and is sort of mandatory for their irrigation. So PVC prices softening and coming back, maybe not to normal levels, but at least softening from the higher levels is good in terms of PVC consumption for the country, especially for the agri market, which is tends to be more cost sensitive. So while there could be some destocking phenomena in volatile raw material markets, I think in terms of long term for the next couple of agri seasons, ideally a lower PVC price bodes well.
Okay, thank you so much and wish you all the best.
Thank you, Abhishek.
Thank you. We take the next question from the line of Shrenik Bachawat from LIC Mutual Funds. Please go ahead.
Hi, thanks for the opportunity and congratulations on a good set of numbers. So now my first question is on the volume growth. Basically, what is the sustainable volume growth that we can see for the next 2 to 3 years? And my second question is basically on the gross margin. So is the product mix only the reason for the gross margin decline, or is there in some component of inventory losses as well?
So in terms of volume growth, it's hard to give any guidances in such sort of a volatile market, but we have outpaced industry growth consistently, and we continue to do that. And in terms of a guidance, it's very hard to sort of estimate where industry growth will be, but I do believe that we will continue to outpace industry growth by 2 to 3% in a base case. So I think we continue to remain bullish in terms of our ability to gain market share. And overall, I think the revival in real estate that we are seeing makes that will have a significant demand traction. Certain industry level as well over the medium to long term, I am pretty optimistic on the demand and consistent volume growth for the larger players like ourselves across different segments, be it retail, projects, or infrastructure. And what we're also doing to improve our market share is launch new products, be it HDP, be it inspection chambers and manhole chambers for the underground segment. So this is also going to help us improve our range and improve our cross-selling that we're able to do in the market.
Sure. So in that case, could you help me with the industry growth or decline in FY22?
I think industry growth there should be a degrowth at an industry level in the past financial year. I think exact numbers we would have when there is a official research.
Sure. So just the last question. Could you please share the progress on the newer products we've been launching various new products in the last 6 to 8 months? So where are we on that? Which products are firing? Which products are slower? Any light on that?
Sure. So for industrial CPVC, our capacities are coming in place, and we should be in a position to launch that in the next few quarters. And I think this is a product that is going to be, not a major contributor in terms of volume, but a very good complement to our existing portfolio because it's going to have almost double the gross margins of our current product portfolio. Although the base would be very, very small in terms of contribution to our overall top line. And on the other end of the spectrum, we have, added, like I said earlier, the HDP pipes and the manhole chambers and inspection chambers, which will be more voluminous in nature, more volume-driven rather than value-driven, but will help us improve capacity utilization and improve, enjoy the better benefits of operating leverage. And in the next few quarters as well, we should continue to expand the product range and launch some newer products which help us improve the overall brand equity of Prince in the marketplace as well.
Thank you and all the best.
Thank you.
Thank you. We take the next question from the line of Jenish Karia from Antique Stock Broking Limited. Please go ahead.
Thank you for the opportunity. So can you just help us with the revenue and volume growth numbers for polymer-wise and end-user industry-wise for the full year?
So, like you're aware, the volume growth for us has been 1% over the past financial year. So this is very heartening to see that in this kind of a business environment, we've been able to keep our volumes intact in the face of a challenging business environment and on a large base as well. And for the quarter, our volume growth has been 9%, and this has largely been driven by the CPVC and PVC plumbing products as well as the SWR products.
Okay. And can you just split it in irrigation or plumbing and SWR for the full year?
Yeah, like I said, the growth has been driven by the plumbing and SWR. As a company policy and as an industry norm as well, you would be well aware that nobody shares segment-wise growth. But I understand why you are asking the question, and the growth has been driven largely by the plumbing and SWR space.
Okay, got it. Thank you.
Thank you. We take the next question from the line of Vivek Tulsian from Newmark Capital. Please go ahead.
Yeah, hi team. Just on the new product launches, the HDP pipe and the manhole chambers, how big is this market and what is the landscape like? And if you take a 3-5 year view, how big could this be for Prince in terms of revenues?
I'm sorry, Vivek, I was not able to hear your question.
Yeah, can you hear me now? Is this better?
Yes, please.
Yeah, so I was asking about the new products that we are launching, the HDP pipe and the manhole chambers. How big is this overall industry, and what is the overall landscape like, and what revenues Prince would see from these products in a 3-5 year scenario?
Yeah, I think manhole chambers and inspection chambers are mainly going to be cross-sold with the DWC pipes, in which we are seeing a good traction and a good growth, especially in the past 1 year. So these manhole chambers and inspection chambers are for the underground drainage sort of infrastructure vertical, and it is mandatory to have one chamber between every 30 meters of DWC pipe. So essentially every 5 pipes you need one chamber. So while I don't have exact numbers in terms of potential, as DWC will grow, and we are very optimistic on DWC growth, we would be able to cross-sell the chambers and grow this product segment as well. Only for the sewer application for the chambers, the market approximately would be around 2,500 to 3,000 crores. This can also be used for storm water and other applications, and there is no sort of official data on that.
Understood. And on the HDP pipe side, how big is that market?
Vivek, allow me to get back to you on that exact figure. Okay, no problem.
The other thing was on the other expenses. So the other expenses have come up sharply compared to last quarter of the last year, and from a full year perspective, it's not grown much. So what are the few line items where this is showing kind of not growing as much?
So this would include, just to give you a few line items, it would be, have power, labor, transportation, advertising, and legal costs. These are the few line items.
And where would you say most of the saving has been? Because, this has not grown much despite our, revenues growing.
Yeah, so I don't see it as a saving. I think a lot of it is, semi-variable in nature. So that operating leverage is bound to pay off when we have this kind of a growth.
Got it. Thank you.
Thank you.
Thank you. We take the next question from Utkarsh N from Haitong. Please go ahead.
Yeah, hi. Good morning, everyone. So I have few questions. First on the capex part. If we see over the last 2 years, we have spent roughly around 290 to 300 odd crore on the capex, whereas our pipe capacity has just grown by around 26,000 to 26,500 ton. Can you please help me out why the pipe capacity addition is so small compared to our large capex?
Yeah, that's a good question, Utkarsh. I think the number of around 250 to 300 crores includes 2 greenfield projects in Jaipur and Telangana. So a significant chunk of this has gone into infrastructure, civil, and utilities at both the plants and the land bank as well, which is why the capex number is higher. And like I said, in the next 1 to 2 years, the focus will now be on these capacities, how we sweat out these assets and drive the market share on the front end, which will help us improve the capacity utilization on the back end. And the good part is now we have the land bank, we have the infrastructure in 2 strategic locations of Jaipur and Telangana, where now when we want to do incremental capex, once we reach our ideal capacity utilization, that incremental capex is going to be very favorable or cheaper, which will really help us in terms of performance going forward.
Okay. And in the second half, if we see, second half of FY22, we have spent roughly 90 odd crore on the capex side. And if I look the capacity data, what we have given in the second quarter presentation and in this current quarter, I see that our installed capacity has come down from 292 KTPA to 283 KTPA. Why it is so?
Just allow me to get back to you on that.
Okay. Third thing is that when we discussed the capex part in the last earning call, it was mentioned that our Telangana capacity is currently at 25,000 ton, and by the end of March quarter, it is likely to go up to 50,000 ton because we are towards the end of the capex cycle. But in our current presentation, it is mentioned that the current Telangana capacity is 17,000 ton. It is lower than what we have guided in the last earning call.
Yes, I think this is being done in a phase-wise manner, and because of the challenging business environment, some of this capacity will be brought up in the next 1 or 2 quarters going forward. There has also been some machines in transit from inter-unit, which is why this difference is being seen.
Sorry, I am not able to understand. Just wanted to know, are we done with the total capex regarding Telangana? Still some amount is left to be spent on Telangana?
Yeah, the total capex for Telangana is done. There is just some capacities inter-unit that are being realigned, which we will be able to realign in the next 1 or 2 quarters.
Okay. And what would be our capex outlook for FY23? And if you can specifically guide, what would be our routine maintenance capex, and if there are any further growth capex for FY23?
So the capex in the current year will be low. It will be mainly towards maintenance and debottlenecking. So would be around 40 to 50 crores.
And what would be the current utilization of Telangana and Jaipur plant at the moment, and what it was there in the Q4?
So, of course, at the moment, capacity utilization is not as exciting, but in Q4 we had reached a good capacity utilization. I think what is important, Utkarsh, is to have, consistently have, capacity utilization of, more than 50 to 60%, and it will take a few quarters for that to happen.
Okay, thanks a lot. Yeah.
Thank you.
Thank you. We take the next question from the line of Rajesh Shah from Alpha Accurate Advisors. Please go ahead.
Hey, hi, this is Rajesh Kothari here. Great set of number in otherwise challenging environment. I have just one question. If I look at the overall industry growth, and of course Prince has outperformed industry, but let's take Prince numbers for a moment. That in last 3 years, FY20, FY21, and FY22, we have a volume growth of 3%, 4%, and 1%. And this is of course better than industry because it means industry has been either zero or it would have been a degrowth. Now, if I compare this with FY19, of course, FY19, the volume growth of industry was also high and Prince was also at around 18%. So my question is, why the flattish growth of the industry in last 3 years? And what will make it to grow at around 9-10%? I'm talking about industry growth. Can you explain this?
Right. So the flattish growth or the degrowth at an industry level has majorly been on account of, COVID and the other challenges which have not only been, I think, in the industry, but for the economy and the global economy at large. I think going forward, like we said earlier in the call, that the industry is poised for, growth. I would say high single-digit growth at an industry level is very, very attainable. To answer your question, and that is, on the back of strong demand traction from the real estate sector, I do believe will help this industry grow at the pace that it should be growing.
So then, why you are saying that it's going to be only high single digit? Because for 3 years it has been flat, correct? So from, when you have a 3 years of zero growth almost, why you don't think that at least for 1 or 2 years, it can be high double-digit growth rather than high single-digit growth?
I mean, if it will be high double-digit growth, we would be, happy and will be, we are in a position to cater to that demand from a distribution and from a manufacturing point of view. So, see, there are so many uncertainties in the environment. It's really hard to give a guidance on industry growth. But, if the industry grows at a better pace, we would be the happiest because we are poised in the right direction today.
Great, Niyal. Thank you. Wish you all the best.
Thank you.
Thank you. We take the next question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. I have a few questions. First, coming up on the capacities. During FY22, can you share the split of capex across plants? Where have we spent this capex amount?
We'll get back to you on the plant-wise capex.
No, just wondering because this Telangana plant, broadly, what would be the split of capex, and is there anything pending on the Telangana plant and even on the Jaipur plant? Capex for?
No, the majority capex has been concluded.
Okay. No, why? I'm asking this because the PPT continues to say that phase-wise capacity expansion over next 2 to 3 years.
Yeah, maybe that would be an error, but there will be incremental capacity as the demand improves. We have set up the infrastructure and the civil and the utilities in such a way that we have an ability to do incremental capex going forward.
Mm-hmm. So that would be over and above the current envisaged capacity.
Correct.
Okay. And second is in terms of your dealer productivity. You have been talking about that your focus has been consistently on generating better yield per dealer. So how has that improved in this financial FY22 and versus over say FY20, something like that?
So I think the focus is on expanding the distribution network. So yield per distributor really is not something that is controllable. Because a distributor could be, it depends on the market, whether it's a urban market, obviously the yield tends to be higher, and semi-urban and rural markets, whether maybe market sizes of that particular district or particular town would be lower. So then the yield in those markets would be lower. So I think yield per distributor is not something which is really controllable for us. I think what is controllable for us is driving volume growth by expanding the distribution network.
Okay, and how has that grown, sir, year on year?
We have posted a 1% volume growth in the past.
No, not the volume growth, your dealer network growth.
So in terms of numbers, it's not something which is very significant. It continues to be, more than 1,500 channel partners across the country. Okay. But no major additional.
Okay, 2 more questions. One is on the project sales, where you have a dedicated team set up and has been working aggressively. So how has that reflected in numbers? What is the revenue share from project sales for you? Maybe in Q4 over, a long, when you can give a comparative period, how has that changed for you?
So I think there is good growth that we're seeing in the project segment, but of course the base is much smaller. So in terms of reflecting on our overall numbers, it's not a major shift. I think retail continues to be the core business for the organization. Project has grown, but it's not major in terms of shifting the contribution from project.
So any target for next 2 or 3 years, like FY24, what sort of project revenue number you're looking at for your overall revenue mix?
See, in terms of revenue mix, it's hard to guide because the retail also will continue to grow. So it's challenging for me to put a, project will be X percent of the overall business, but it will continue to grow. We are, we are babies in the project market. We have a long way to go. While we have made breakthroughs in multiple accounts, we have a long way to go. So, we should have double-digit growth in the project segment consistently for the next 2 to 3 years.
Okay. And one last question in terms of the demand side. If I see the last 3-year volume CAGR for most of the players, we see Supreme and Phenolics have degrown on a 3-year basis. Among the bigger players, only Astral have grown around 6% volume CAGR. Prince have delivered a 3% volume CAGR. So the point I'm trying to get into is, there are 2 points. Is the market itself has not grown over the last 3 years, first? And second, the hypothesis that there is a consolidation, smaller players getting weeded out, or it seems the other way around. Top 2 players have not seen a volume contraction, and some of the mid-sized players like Prince, Apollo Pipes has shown volume pickup. So how do we understand this demand and market consolidation?
So I think, the overall trend is towards consolidation, and the organized players have become larger. Within the organized, there have been some players which have been more agile with more of a focus on distribution and newer product launches and heavy investments into the marketplace. So within the organized players, of course, there are going to be players on different ends of the spectrum. But I think, like every industry, this industry continues to formalize and continues to consolidate. I do believe that.
So on demand, any view? What would be the demand growth last 3 years or maybe FY22? What sort of demand the industry has grown, and also what sort of number you're looking at from a macro perspective? Because that would be an important driver.
Yeah, you're right. It would be an important driver, and going forward, I do believe that I cannot quantify it or put a number on it, but there are strong growth prospects given that real estate is headed in the right direction.
Mm-hmm. But you would agree that last 2 to 3 years there have not been any growth in the industry? Is that a fair assumption?
Yes, that is a fair assumption.
Okay. Great, sir. Thank you. All the best.
Thank you.
Thank you. Due to time constraint, I now hand the conference over to the management for closing comments. Go ahead.
Thank you to all the participants for joining the call today. Thank you.
Thank you. On behalf of Systematix Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect.